Tribeca Trade Group, and this is your end of week and end of market recap. Wow, what a day! Unbelievable moves for intraday. If you're a big scalper, you probably absolutely love today, as long as you can pivot from one area to the other. But I often talk about how the month end days are a bit tricky, and I think today certainly had that. Now, I think that there was also an MSCI rebalance, which kind of shook things up a little bit. And if you look at some of these names that traded at the end of the day, I mean, it was pretty remarkable to see some of these swings, kind of just to give you an example. But well, of course, like if you just look at the S&P, that picks it up. But I mean, really, this kind of picked up the last like 15, 20 minutes of the trading session. Just a huge move. But yeah, you could look at what Walmart did. And Walmart took off like a rocket. Look at the volume too that went up at the end of the day. A lot of times what they're doing is they probably put a lot down. Whoever traded this probably put a lot down for the close, and then probably trade it in. That's what I used to do when I was an institutional trader. We had to do a lot of orders that were for MOC, market on close, that had to get the closing print. So you would, put down a good, a portion of the order depending on what your strategy was, because if you most of the time you just have to guarantee the closing price. But if you knew it was a big order, you were definitely trading into the close to try to minimize the impact. But you could see there definitely was an impact. Also, like names like Home Depot, again, look at the volume at the end of the day. So, again, these things were probably just shifted around. And I had a couple of comments when I put this on Twitter a little bit earlier, and people said, "Well, what about this? This stock? Well, if it wasn't in the rebalance, then it didn't have that type of a move." I was even looking at Amazon at the end of the day because I was like, "Oh, I would think Amazon will catch a little bit." But kind of like not exactly inverted head and shoulders, but just a break above the range. But in any event, let's talk about where we finished in terms of the indices for the month, and then I'm going to go through and give you all the performance for the week and for the month. That's how I basically like to recap do these recaps at the end of the month, is to kind of give you a sense of like what really outperformed. So just bear with me. I'll get to all that. So first of all, like the reversal, I thought that before I go over like the technicals on the daily, but take a look at what happened this morning. Now, I didn't know that this was going to that this was going to definitely mark the low of the day, right? That's called a virgin point of control takeout, right? A lot of times you'll basically, if you're not familiar with this, you could go to my pinned tweet. You can also go to marketwebs.com, and we have an explanation about volume at price and about how we use it. It's much better than things like, I know a lot of people are using these days anchored VWAP, right? But with this, you're not anchoring anything. You're not using any of your judgment. It's all laid out for you, right? And that's on the 1 hour and the daily time frame. But this was a demand area, and up and away we went. And I said it in the trading room when it happened. I didn't think that we were going to get that sharp of a reversal. Also, because if you look at the Qs took out a virgin point of control and kept on going down a little bit south. So again, it's always, so what are these, right? How do these work? Well, when they're above price, it's known as, like, for me, overhead supply, right? That's where a lot of volume has occurred, and sellers may be waiting there to basically get out of, get out of a trade. Down here, it works as demand. Now, if there's a lot of selling pressure on the tape like there was this morning, the sellers can overwhelm that demand, which is basically what you saw until the selling dried up, and then the buyers kind of took over at that level. So this was not exactly precise, but again, it's basically it's a tug of war between the buyers and sellers. So if there's a lot of sellers like there were this morning, they're going to overpower that demand a little bit, and you could see price actually move back. So I just wanted to mention that because I thought that was really instrumental in today's reversal, that taking things over like that. Let me get to the daily charts just to show you. So first of all, we can kind of look at the weekly chart. We can do this in the right the right way this time. But and I'm just gonna zoom in here a little bit. But overall, like, that's not a bad candle. And we've seen a lot of things over the last couple of weeks. We saw breadth really break down. We saw new 4-week lows really pick up. But it's also like towards the end of the month, sometimes you can see those things. So it's really good confirmation, like when you see that breadth is starting to break down, that usually there's going to be some type of volatility. And volatility, what did we get to? We got it to about 1450. That was the high point of the VIX this week, which was not a really big level. But you don't know how shallow sometimes the pullbacks are going to be. And I have to say, like, this is pretty darn good. This candle. This is going to zoom in just a little bit more, but you could see on the for the weekly bar, we explored lower levels, obviously, and came back and we're holding above those moving averages. Let's take a look at the daily chart as well, because May is now over. That's pretty bizarre, right? We broke into value. Also, I mentioned that 1-hour version point of control. Also, the 50-day moving average came into play too. And a lot of people who just look at moving averages, I'm sure they're going to say, hey, it was a great bounce off the 50-day moving average. But notice I had a downtrend line drawn here, which kind of capped the price in the S&P over the last week and a half. But look at it, we got right back above the value area. So yes, that's the end of May. We can now look at this June value area, which is right here. Most likely we're going to open up inside the value area. So it's going to be interesting. We saw a little bit of everything over the last week and a half. You go back to last week and everybody was talking about how tech was outperforming. This week it was it was different and a lot of the earnings reports did that. I think a couple of the takeaways from the earnings reports were that tech is going to be mixed. It's not like tech had all bad reports this week. Just the bad reports were really really hit hard. Some groups, like, of course, like what Dell did and Salesforce, to name a few, but of course there was others. And then things like Zscaler and a few other names actually did well. Another standout was what retail did this week, and like pockets of retail. Always with retail, as I've gone over in these videos this week, it's not going to be all of retail. Right, the consumer switches around. They go to the hot areas, right? So, the Deckers, the Abercrombie and Fitch, the Gap, right? And Gap is a little bit, I heard that Athleta did well, which is a little bit of a cheaper Lululemon, right? So, the consumer is being, perhaps is trying to be smart and, go after some cheaper products. So I think that's also in play. But I have to say, for the XRT, it was pretty impressive. Burlington was another one, So, I mentioned this earlier, and some people really got angry at me because I said the consumer's not dead, and they're like, "Well, look at Kohl's," and I'm like, "I understand. There's going to be those underperformers. Like, who's shopped in Kohl's lately? They are not a top name, but." But that's how it always is for retail. But again, those names going up, it just shows that the consumer is alive. Perhaps they're being a little bit more picky and choosy. But here's your XRT. This is something that we talked about earlier in the week. The price was above all these short-term moving averages and acted really well. Let me just go back to the performance for today. The diamonds, that was something that I just thought that the diamonds were a bit like sold off too hard this week, and they had a hell of a bounce, and I caught that today. I really kind of caught that off the 1-hour chart today. Just noticing that it just looked like this was due for a bounce, right? There was also one of those version point of controls taken out, decline, and it just looked like it was a little bit too extreme. Also, I saw this on the 5-minute bar today too, so that was my better trade, and this week was tough. I thought that this week was really difficult to trade. I always find these end of months harder to trade than, well, not every time, nothing's certain, but I would say more often than not, I find the end of the months really difficult to trade because sometimes it's just not consistent, right? And I think even if you look at last week's performance, right, because I always recap last week's performance. And if you look at it, the performance this week, it was like the polar opposite. And the reason why I know that is because when I look at this, so here's the performance for this week, and you notice I put this in like different colors. I had to flip around just about everything because the Qs were the outperformer last week. This week they were the underperformer. Small caps did horrible last week. This week they had some relative outperformance, right? SPY was flat last week, exactly 0.0, was down 0.3 tenths. Also, value. This is another one I had to switch around. Value app performs up a 0.5%, although growth wasn't down that much. I believe that's right, down 1/10 of a percentage point. All kinds of craziness in terms of just different sectors in terms of the performers for the week. Solar was up 7%. For the week. Retail, as I mentioned, was very strong, up about 5%. Clean energy's up there too. Obviously, a lot of crossover there with solar and clean energy. Utilities did quite well, up 2.7%. Metals and mining, even the builders were in there. And then on the downside, look at the internet stocks, down 3.8%. I don't think I have IGV in here. I apologize, but I would assume that was also one of the. I have it on another sheet, but and there's your international performers. Interesting how hard EEM got hit this week, down 2.9%, but international developed, which is EFA, was up fractionally, and bonds were all over the place too, which that was another thing that that caused some separation in different groups in different indices, right? There was a big bond move that happened earlier in the week, and then bonds rallied back the last 2 days. They did still finish down 1% for the week, but I think at one point TLT was down 3%. For the week. So the last 2 days were a rally of about 2%. So, again, that causes things like, things like small caps that do really well, and hence they finished up on the week with the bonds rallying the last 2 days. All right, so that's your weekly performance. Let me just go back to this sheet because I just wanted to talk about where we are in terms of for month to date and year to date. Right. And you can go to this. I'm going to zoom in here so that you can see this a little bit better, hopefully. So for the month, the SPY was up 5% for the month. Qs, even though the underperformance was up 6.3%. And your small caps and mid caps actually did okay as well. Right. I didn't look at those in terms of the we can look at a couple of these too on the weekly and the daily charts too. Just get this right here. Oops, don't need all these in here. But here's where the Qs, so a little bit of bearish engulfing, it looks like, on the weekly. Sorry, it takes me a little while to just get this adjusted. Yeah, that looks like a bearish engulfing for the Qs. So kind of interesting there. Here's what this looks like. Again, another hammer bar. And this managed to stay above the value area for the month. And then again, this will be right inside the value area for the new month. So we're going to be, I think next month is going to be pretty wide open because leadership was just like all over the place. So I myself will be looking for like a little bit more consistent markets. Don't know if we'll get that. Here's your bounce that we had for IWM. Tested again. This IWM loves to test this 50-day moving average. So tested it again and bounced. That also lined up with the top of the May value area. So impressive that bounce that we had this week to finish positive, it looks like, for the week. Mid caps also were kind of trailing. I was worried about these mid caps because they really broke the 50-day moving average too on Wednesday, but they did get back above the May value area. Will also start inside the month. I spent a lot of time talking about TLT earlier this week. So here's the bounce I was referring to. Again, we're in a pattern of lower highs here. and we got another bounce, and I don't know if that's really going to change any of the technical picture there. It is trending down, but I think the main thing I'm watching is if we stay above the lows of April. All right, I think that'll be important. All right, a couple other things to go over, as I mentioned. Just to recap the performance, this was the performance. ARC, unbelievable. I'm not going to bash the management of ARC, but we were talking about this during today's Q&A. And it's like a case study. It should really be to help you learn about, what their philosophy is. They stay with names as they go down, 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 and they average down. And you could see how that performance. I saw a comment the other day. They're like, well, long term, they're not trading. It's for long term. Their last three, and again, I'm not trying to make this video negative about this, but it's to help. It should be to help you learn not to do things like they're doing, right? And performance speaks for itself. When you look at the performance, this is over 3 years, so this is not short term. This is not trading, right? And you can look over 5 years too, right? Look at the underperformance. This is supposed to be innovation, right? And you can look at this with versus the Qs if you want to be even more judgmental. But down 27% over 3 years, that's not trading. That, to me, 3 years is kind of long-termish. To be down 27%. And again, it's the style, right? They don't use stops. They don't, so more common philosophy, including my own, is you could have conviction in names because they certainly have conviction in their names, but price should be your ultimate guide. And if price is breaking down, you get out of the trade, and you could always get back in once it gets over a level. But that's trading or investment 101, is to have a stop price, right? And not just keep averaging down, so that you're not, they're doing rookie mistakes, like saying, hey, I'm not going to be wrong, so I just keep averaging down. So the performance speaks for that. So there's no excuses, right? Performance is performance. One other thing I wanted to go over too for today was the VIX was down 10%. Just a crazy, crazy swing. Year to date, that brings us for performance. SPY is up 11%. Interesting that SPY and Qs are now neck and neck for the year. IWM is still underperforming, up 2.5%. There's ARC down 19% year to date. And when AI has been one of the themes, just astounding. Kudos to the IBD 50 ETF, up 13% year to date. Very nice. Value growth is outperforming value, 13 to 7%. Small cap growth is outperforming small cap value, and TLT is down 8.4%, and the dollar's up 5.8%. I have another spreadsheet too, which we can kind of look at sectors and what outperformed for the month. Pretty astounding, right? When you look at this, I'm just going to move this, and I'm going to get rid of this so that you can kind of just see what I'm displaying here. And I'm going to zoom in here a little bit. Would I have said solar was going to outperform like this, up about 20% for the month? Unbelievable. Clean energy up there as well. Big reversion to the mean. If you want to, I've talked about this chart a couple times. Even though solar was down, I think at one point today, 3 or 4%. But if you're using the 200-day moving average as your stop price, or maybe a little bit below, you're still in the clear, right? And I think that's the easiest way that you can. I just moved my trend line. Sorry about that. Let's leave it. Happy little trend line right there. But yes, if you're using the 200-day moving average, you're still alive in that trade. The semis, of course, getting all the attention. Big Nvidia earnings obviously last week. By the way, I really thought that the Nvidia kind of saved the day last week in terms of there was a lot of groups that were breaking down. I had talked about de-risking last week, and then of course Nvidia comes out and rallies like crazy and brings all that whole theme up. So very, very impressive. To log in 12%. All right. Retail also up there too, which obviously a lot of that performance was this week. Metals and mining had a good month, 8.7%. Gold miners partly responsible for that. Biotech did well this month, up 5%. And you've got a slew of other areas that were up about 3 or 4%. Software was the underperformer, down 1% for the month. Also, internet stocks down 0.7%. So really interesting that tech, where is tech in this? Probably somewhere in the middle, I would think. I don't see it, so I'm just going to search. Interesting. Tech was up 7%, but internet stocks and software names were down. And again, probably the tech kind of caught in the middle, with high performance coming from the semis and low performance coming from internet and software. All right, so that's a quick summary. Also, this really kind of flipped. This is like a momentum momentum scan. Again, just look at how things kind of change there at the end of the day. And again, this is just what gives it strength is the 5, the 20, and the 50-day moving average. So price gets above, strength will be labeled next to it. And so you've got a few different groups now. Your retail, which was marking that way almost all week long. Also, aerospace is in there too. So again, just kind of gives you a sense. This is, again, short-term momentum is the screen. Here's how our screener did for this week. ONON. I didn't take this trade, but that name did very well, up 5.4%. T-Mobile also. So just very difficult to kind of come up with themes as erratic as the price behavior was this week. And Analog Devices, which is a name that I just added to the watch list today, as a matter of fact. So I will say this. Obviously Dell kind of deflated the pin action in all the AI names, but I think overall you want to see names come down, and to give you a little bit more of a trading setup. So here's the chart of NVIDIA, like just an example. But when things go up like this, parabolic, you want them to come in and settle in a little bit so that they can give you a new trade setup. So I think overall, like names coming in a little bit is actually like a good thing and sets things up, because there's a lot of things like that look like this, right? Extended, nice little breakout, of course, from sideways price action, and then, of course, ripped higher. Now let it settle in a little bit. See some profit taking. If it fills, I think it filled this one gap. I don't know if it's going to fill. I would love it if it came all the way down to the 20-day moving average. That would be a great buying opportunity, wouldn't it? But I don't think that that's going to happen. I think buyers will come in who've been on the sidelines waiting for that to happen. So we'll see how it sets up for next week. So ultimately, you can that's the way that I look at it, right? A little bit of selling kind of gets things more in check, and will bring out some good buying opportunities. So if you've been doing this for as long as I have, sometimes you're actually rooting for some pullbacks to kind of shake things up a little bit, to shake out the sentiment, and so on and so forth. My performance for the month, I finished up, and I'll put this out on Twitter later, as I always do, but I finished up 17. I'm up now 17% year to date. That's in my trading account. I made some errors this last week. I seem to always do that a little bit, like the last couple of days of the trading month. So I gave back some performance, but it is what it is. Everybody makes some mistakes, or just executes a little bit poorly. I knew that this market was showing weakness, so it's on me. That I should have been a little bit more in cash than I was. I always try to navigate through it a little bit. And rather than, I should have definitely upped my cash balance a little bit more. I did a lot of little starter trades this week so that I can kind of participate. But sometimes with when the volatility picks up, sometimes you get hit on the starter positions too. TTG trend portfolio, which is more ideal for which is nice because that doesn't adjust. Like I do rebalances like every couple of weeks. That's more suited for part-time traders or traders who just don't want to look at their portfolio every second. We're just following the trend in that. I don't have the way that portfolio is situated is no name is more than 5%. So Nvidia is in there, but it's not, it's not over 5%. So it hasn't really skewed the performance that much. Those are just some of the rules that I have in the portfolio. But again, it's more geared toward if you're like, if you're a part-time trader, it's outperforming quite nicely. The S&P, what did I say, is up year to date, is up is up about 11%. So I'm outperforming, not by leaps and bounds, but I'll look to carry on through, and outperform again next month. So again, interesting how close the performance is for the trading account and the TTD trend portfolio. Speaking of which, if you want to try out Tribeca Trade Group, I think I can. This special is still going. I don't think I shut it down. So you get two months of the trading room and everything that we do for the price of one. So that's a great place. I posted this. I'll repost this, but just wanted to wish everybody a great weekend and new challenges await in June. So if you had a great month, congratulations. If you didn't have a great month, that's okay. Concentrate on what you did wrong and get after it for the month of June with making some adjustments. That's what it's always about, is making some adjustments, right? Nobody ever is perfect in their trading, right? Everybody has some flaws here and there. So that's what it's all about. And look to see you guys in the trading room. Thanks for watching me on Friday.